by the way, can I plug
Congratulations. You're a dad, right?
I'm a
Are you
dad
dad?
now.
Yeah,
Welcome to the club, dude.
It's
Little girl,
amazing.
right?
Little girl, really cute,
Well,
starting to smile. The most exhausting and most brilliant thing that happened in my life.
oh, dude, it's the best. It's the best journey you'll ever be on. How old is
It's
she
so
now?
good.
Like 2 months, right? Two months.
2 months, but as I like to say, she weighs and it's the size of a 4.5 month old.
Welcome back to This Week in Carbon. I'm your host, Edward Smith, alongside my weekly bestie, Rene Velasquez, who's here. Last week he couldn't be here, but he's made it today, so good to have him. And today we have a fantastic guest, Sebastian Manhart from Carbon Future, also a co-host of the CDR Policy Scoop podcast. Be sure to check it out. And overall, just a great thought leader in the CDR space. So, Sebastian, thank you so much for joining us today for this conversation. Really excited to dive into a number of topics. We have the CDR market breaking records, Europe is debating their targets, and we have national policies picking up to speed. So, I want to unpack the numbers, the politics, and some future standards shaping the space. So, before we dive into that, would love to do a quick intro on you and maybe your role at Carbon Future and what Carbon Future is doing in the CDR space, and maybe touch on your career briefly prior to joining Carbon Future. What led you into the world of climate finance and CDR?
Can I add one thing before you do that, Sebastian? He forgot in the intro that you're a new dad. So congratulations on being a new father.
Thank you. Probably the most important job of all.
Thank you, Rene.
And
definitely the best job in the world.
I also want to start by saying that whoever chose the intro music to this podcast nailed it, because I listen to podcasts on the bike or running, and whenever that intro comes on, I go double as fast. So
oh, really? Oh, that's so cool. I'm going to give that
it
compliment to Olaf.
Oh,
good. You know what? So Olaf, so we came up with the idea a little while back, and then it took a little bit of time to kind of get the thing going because there's so many other things on our plate. And Olaf, my producer on the carbon exposure side, he came to me one day and he said, "Hey man, I was just jamming with a friend of mine, and we wrote a song. What do you think?" And he sent it to me like the wave file on my WhatsApp, and I was with my family. We were walking, and he sent it. I was like, "Dude, this is jamming. I like it. Let's go." And then the initial idea was actually to get my daughter. So she spoke over and she said, "Welcome to This Week in Carbon." And then she's laughing at the end. We're going to put that on the back of it. Maybe I'll tell the guys to put that on as the outro track for today's episode. But we stuck with no vocals. So I'm glad it amps you up. WS fast.
Excellent. And so, yeah, I mean, my job is I guess carbon removal policy entrepreneur. I try to convince governments around the world to put more money into carbon removal. And I go wherever I see opportunities for that. I am the senior policy advisor at Carbon Future, lead policy there. And Carbon Future, for those who are less familiar, is a company based in Germany, but also operating globally, that is really the market leader in carbon removal for building trust infrastructure. And I can maybe expand on that. Like what we do at Carbon Future is we want to see a huge, mature, scalable CDR market. And we know for that to happen, carbon removal needs to become essentially a tradable asset, right? And it needs to be fungible. It needs to be trusted and with very solid monitoring, reporting, and verification. And so we essentially built the tools to get us there, leading with our MRV Plus product. But it's really focused on essentially a liquid, fungible asset in a future huge market. My personal background is I was an entrepreneur. I'm an economist. I was an entrepreneur for many years. Ran my own social enterprise, operating mainly in Africa and Asia. Then I went on to advise Angela Merkel's chancellery. That's when I got my first taste of policy. And then I never looked back because I realized that policy is just a huge lever to move and to have an outsized impact with your input. And then I discovered carbon removal. And when I first heard about it, it was obvious to me, it's a young market. This is a couple of years ago. The young market, policy is going to play a huge role in this nascent market. And I thought that I could make a difference in it. And so, yeah, here we are.
Yeah, amazing.
I'm just really curious. Obviously, I'm familiar with Carbon Future. My friend Dominic Luden works with you. We go
I
back
remember
a
him
long,
coming on with you. Yeah.
yeah, a long time ago. We used to work together at First Climate. He's one of my favorite people, and then he was on the other show. But something you said was really, really interesting, right? Because it aligns kind of the economics part of, I guess, of your background, and the entrepreneurial part as well. And I want to kind of double click on those. And sorry, Eddie, to hijack your show. But I'm curious in terms of what are the attributes that you think will help the CDR market to scale, right? Demand is one, right? And policy helps to drive that through certainty. But it seems that cost or price that needs to come down significantly for that market to scale, right? And most projects, or most markets, I should say, begin with nascent technologies. The price is certainly higher because it's of the R&D effectively, and then over time, as you start to achieve more and more and more sort of units, that unit cost starts to come down, and then you start to see scale in a response. Is that applicable here in the CDR space, and are you seeing that emerge across different, I don't know, methodologies or technology verticals? You've got a bunch of different flavors within the CDR space. So more broadly, how does price equal sort of scale?
I would say
elasticity there?
yes, but if we look at the voluntary carbon market today, I would say that you hit the nail on the head. There's no single factor that will drive demand or that is a bigger factor in decision making of corporate buyers. Nothing beats low cost at the end of the day. There's a lot of other things that they care about, but they will go for the low cost options. We've seen that across the board. I don't think that cost.
So how does it get distributed on the CDR spectrum? So does that mean more money is going towards biochar as in practice than DAC?
Even nature-based solutions, right? Like if we look at where the money is going, the majority is being spent on lower cost options, right? And then you enter the durable space and you're seeing that there's a preference for biochar in many cases because it is so cost competitive to others, right?
So as more money starts to crowd in, you start to see even more compression. So maybe there's a race that starts to kind of push around. Right?
But I don't think that's the long-term factor. What I was getting at is cost plays a big role in the voluntary carbon market, but I think what will really drive demand and the next step changes is reducing complexity and compliance. And reducing complexity means having, for example, comparable products, right? Fungible CDR credits. That you don't need a whole team of people to look at to understand if you should trust it, right? That's one thing. And the second one is compliance. There are huge limits to the voluntary carbon market. And the only way to break out of that, in my view, it's a very European view maybe, is compliance, because carbon markets work and carbon markets are expanding. And if we get carbon removal into compliance carbon markets, that will make demand take off. So yeah, cost is very important.
The demand is sticky. It's mandated as opposed to being voluntary.
Exactly. And then at that point, I'm not sure it will make such a difference if the cost of a durable carbon removal credit is going to be $110 or $130 or $160 per ton. If it becomes competitive with, say, EUAs in an ETS. So yeah, now it's very important. In future, I think it will become a little bit less important.
Thanks, man. Interesting.
Yeah, well said. Well, I want to dive into the fact that CDR in Q2 of this year had its biggest quarter ever, right? And touching on the demand side, there was 15.5 million tons of durable removals contracted in Q2. So that was more than all previous quarters combined. And this leap was driven primarily by one buyer, who we all know is Microsoft. They signed 5 mega deals totaling 14.6 million tons of durable removals, about 94% of the quarter's volume. So, but even excluding Microsoft, other buyers contracted around 1 million tons, making Q2 the second biggest quarter ever, only slightly behind Q4 2024. So, but we're continuing to see a shift towards BECCS and bio-CCS for purchases, while biochar keeps dominating deliveries. And this was from CDR.FYI, so be sure to check them out. And yeah, I want to unpack this with you, Sebastian. So, I mean, from your vantage point, what do you think explains this huge leap in CDR contracting volumes this quarter? Primarily by Microsoft, but other players coming in. And do you see there are risks in the market being so concentrated around one or two large buyers?
So first, let's celebrate the success, right? Climate is not doing well as an industry as a whole. It's not a top
Yep.
priority, not even a top 3 or 5 or 7 priority for most governments anymore, which is very, frightening. And against that backdrop, we're seeing continued growth, and we're seeing actually exponential growth of the carbon removal sector, especially the durable carbon removal sector. So that's, I think, something really worth highlighting and celebrating. And now the concentration, I mean, Microsoft, yeah, was 93% in that quarter. I think historical, it's still 75% or even 80. It's huge, right?
Mhm.
And that creates a huge dependency. I mean, I know that anyone under the sun in carbon removal is trying to get a deal with Microsoft, right? Like they are by far the biggest buyer. And I think we should welcome that, and we should see it as a huge push to the sector as a whole. But we should go in with open eyes and know that they have an aim. They want to try to compensate the emissions from the founding of the company, but at some point they'll be done, and then there'll be just yearly emissions, and so their demand will come down. Now, I'm very pleased to see that there are more actors coming into the space, no more corporate buyers. You mentioned it, right? Even taking Microsoft out, it was the second biggest quarter ever. I can anecdotally say from also our work at Carbon Future that I see new buyers entering the space all the time. They might do smaller purchases, they might do purchases behind the scenes, not announce them, but they are making purchases with the intention of making bigger ones after. So that's positive. Now, again, I said it already. I think voluntary carbon markets are a stepping stone, maybe a crutch towards where we need to go. They're not going to get us to gigatons. That's my personal opinion. And I think we need compliance. And so the question is, how do we bridge the next 4, 5, 6 years until compliance kicks in with voluntary carbon markets and maybe other support by government, right? But that's how I see the current situation, and all eyes for me are on the compliance side. And maybe because you touched on deliveries and kind of BECCS, bio-CCS, biochar. BECCS bio-CCS is the obvious source of megatons in the next 5 to 7 years. They just have advantages when it comes to scale that no one else can match, and it's a no-brainer. I mean, you just tuck on a CCS unit on facilities that are already producing megatons of emissions, right? So it's an obvious one. On biochar, the biochar story is really the story of ExoMud Green in Bolivia. And actually, I'll highlight for people who haven't seen it, I went there in January and shot a beautiful documentary called The Power of Biochar. So if you want to see the story of ExoMud, go on YouTube, type in Power of Biochar. It's a great film.
Oh man, we're going to share that.
It's
Man after
amazing.
my
Like
heart.
for me, it was so incredible to spend a week with the team and them showing me around the facility, showing me where it comes from, the biomass, showing me how it's applied on indigenous lands. And they're going to be, I mean, in my view, the first megaton CDR company in terms of deliveries. They are pacing ahead of everyone else in terms of scaling durable carbon removal deliveries. So biochar is very promising because it has a high TRL, but really these numbers are driven by ExoMud. And Carbon Future did the first megaton biochar deal with ExoMud and Microsoft as well, where every ton is going to be verified with our MRV. So yeah, that's kind of how I see this, and it will probably continue. I think deliveries are going to keep being dominated at least for another year or 2 years by biochar until bio-CCS and BECCS takes off.
Yeah, and I want to touch on something, that you said about bio-CCS, right? And how scalable it is in the next 5 to 7 years. And particularly across Europe, because the jurisdictions are, in different, Eastern Europe is very different from Western Europe, right? And what incentives are there across the board, I mean, for these CCS to be retrofitted on these, biomass power plants? Or like, is it as scalable as it seems? Because there are very high capital expenditures, right? It is very cost intensive, and the credits are very expensive, right? So, I mean, what incentives are there for power operators to really have their plants retrofitted with CCS, other than compliance, right? Like, other than being forced to do so.
And we're seeing a great dynamic there because actually bio-CCS BECCS is probably the technology that's getting most government support today, and not just in Europe. I mean, in the US, if you look at pulp and paper in the Southeast, it's huge. and they can benefit from 45Q at $85 a ton, right? And you've got developers like CO280 who are going all in, and that's one of the Microsoft deals, by the way. And so there's a great example in the US of CCS support that's leading to big offtakes. In Europe, you really see Denmark and
Is that
Sweden.
policy sticky enough, do you think, over time? Because obviously there's been a very well-documented shift in terms of policy direction in the United States.
Well,
obviously, you got federal versus
beautiful,
state. Yeah, but
yeah.
in the one big beautiful bill, can you elaborate on that?
Yeah, in the one big beautiful bill, I would say it's devastating for climate. It's a big shit show, if you pardon my French, but it does show an ongoing commitment to 45Q. So 45Q is here to stay. Everything else was kind of axed, right? But 45Q is here to stay. And so
is that because of the revenue potential for these states in terms of the infrastructure bill?
Probably, yeah. And also, if you look at who's mainly benefiting from 45Q, there are a lot of oil and gas companies, right?
In red
and
states.
so, exactly. So 45Q survived and will continue to survive under the Trump administration. And so I would say the bio-CCS X potential is very big in the US. In Europe, the focus is on Denmark and Sweden. Denmark has a huge fund and has actually already signed, significant, I think 350 million euro already deals with bio-CCS companies, the biggest one, Ørsted, another Microsoft offtake. And in Sweden, you've got Stockholm Exergi, who got 150 million from the European Union, just won a $1 billion tender from the Swedish government, and again, sold to Microsoft. So you see that these companies are able to sell at very competitive prices, comparable with biochar actually, because of these subsidies.
Yeah, certainly. Okay. Well, I want to be conscious.
Guys, I'm sorry to just interject for a second, but Sebastian, I just wanted to say hi, man. I've got a dinner party going on, so I just wanted to just jump in and
thanks for popping in
a little bit. No, pleasure to see you, man. I want to invite you also back for another deep dive. There's so much work that you and like you're highlighting, also your peers in the CDR space are doing that we really want to feature and we really want to learn from. Because as you said, VCM is a stepping stone. The interesting thing is that there's so much fungibility, and I'll let you guys discuss this, right? Because of the project-based approaches, the project financing, the structure in terms of de-risking, et cetera, it's all very similar, right? The crediting piece, right? And it's just the demand signal that differs, in my opinion, from voluntary to compliance, right? It needs to be mandated, like you said, and then the demand and the compliance market is steady and it makes it investable. So, really want to
anytime
kind of hear from you again and invite you back, and take care. Thanks. Thanks,
see you,
Eddie.
Rene. Have a good dinner.
Yeah, thanks Rene. All right, so I think, resuming there, there are some really good, I want to be conscious of time, but also I want to just double tap on the CCS again. So, because my question, it was about the incentives, right? Like what I think there are a lot of incentives to capture, but there are no real incentives to store the CO2, right? Geological storage. And this was something that when I was living in Scotland, like they were very serious about. In Edinburgh, they're very advanced, like geological storage research centers, and this was one of the main challenges across Europe, is that there's incentives capture, but no incentives to geologically store. And I don't know if you can touch on that before we move on to our next topic. But do you have any thoughts there?
I wouldn't agree fully. Like, I think there are incentives. I mean, I mentioned two of them, right? Because in Sweden and Denmark, you only get that subsidy if you store, right? And this carbon removal credits you only get if you store as well. But at least the subsidies are at the national level. So I think that's fair enough.
So the carbon removal credits, you only qualify for the removal credits in those jurisdictions if you geologically store the carbon.
Yes.
Okay. Yeah.
At least for the Swedish and the Danish subsidy. Yes.
Okay. And then once you qualify, but those are still in the voluntary market, right?
Well, this is where it gets really tricky, and Microsoft got some heat because all the removals that happen as a result of these subsidies are counted towards the Danish and Swedish NDC. At the same time, both countries encourage co-financing with the VCM, which allows the providers, the suppliers, to provide a very attractive price to Microsoft and others, which is why they buy at huge volumes, and they get heat for saying it's double counting. They would counter it's co-claiming, and Microsoft actually wrote a whole piece about the Ørsted, the Danish case. And in Europe, in my opinion, it's actually very common to think that co-financing is the way, because that way, essentially, you can double down on the purchasing power of the government and of the VCM. But for some people, it leads to a lot of open questions and it gets quite messy. So it warrants a whole podcast just to talk about that. But that's the approach that these countries are taking.
Yeah, no, that's super interesting. So they're claiming it against their NDC, but then is Microsoft's also claiming it against their internal, like against their emissions balance sheet? Or are they just kind of financing it as a venture capital like play to scale the technology?
Well, the argument is that everything that happens in the corporate world, unless it's tied into a compliance scheme, is a completely different ledger from the Paris Agreement ledger, right? And from what happens under NDCs. So whatever Microsoft does or other buyers really doesn't matter. It matters which country essentially claims against the NDC. Microsoft will also use a lot of language around contribution claims, right? We are helping scale this industry. We're using it essentially to contribute towards climate change mitigation. It gets a bit tricky because in their language, obviously, they also say they use net zero as a term, right? And that's where it gets, I think, confusing, because net zero is something that was created under Paris for governments, for countries, but companies are using it. And that's why I think a lot of people get it confused. But the reality is it happens in a ledger that doesn't interfere at all with NDCs in Paris. That's why it works. But again, for some people, this is very complicated and they're strongly against it. There's some really strong opinions on this topic.
Yeah, certainly. I mean, it's very complex. I mean, just the differences in jurisdictional regulations alone make this market complex. I mean, it's imagine being an expert in every jurisdiction of the rules and regulations. It would be almost impossible with the carbon markets. But I think shifting gears towards EU climate policy and what's going on there. Over in Europe, we have a major policy decision that got delayed that could have big implications for CDR, right? So EU member states were supposed to agree on a new 2040 climate target, aiming for 90% greenhouse gas reductions versus their 1990 baseline, and by mid-September. But that plan has been postponed due to some disagreements. So key countries, including Germany and France and Italy and Poland and others, have pushed back on finalizing the targets and insisted it be taken up by EU leaders instead. So what's the conflict about? A big sticking point, I think, is about Article 6, the international offsets. And the EU Commission's proposal was like I said, 90% net reduction by 2040, with up to 3% of the effort allowed via carbon credits from other countries, international offset through the Article 6 mechanism. So that implies at least 87% of cuts achieved domestically, and only a very small, minute role for international removals or offsets starting in 2036. And we had Mark Lewis on the podcast like a few months ago, and he was very adamant about this. And I recall what he said. He was like, that's 1 million tons per member state per year for 4 years. It's absolutely nothing. Like, it's peanuts. That's what he
I
said.
have to correct you on that math. Can I start there?
Is it a little bit more than 1 million tons per member?
It's a lot more. So here's the catch. People hear 3% and they think, 87% is still domestic. 3% of 1990 emissions. That's around 30% of 2040 emissions. This is the big catch that a lot of people maybe haven't understood. We're talking about almost a third of all efforts in 2040 being done with international credits.
So how much emissions were in 1990, for example?
So it would be between 100 and 145 megatons in the most conservative scenario in 2040. That's just 2040. If it starts in 2036, which is the proposal, and scales towards 2040, it's 400 megatons. If it starts in 2031, which some people are suggesting, and scales towards 2040, it's 800 megatons. It's
Mm.
huge. So that's why I had to interrupt and correct you there,
No,
because
yeah, no,
I think
please.
people don't understand that math, and it's a huge volume, at least a third.
Okay, so but it could be a huge volume, but it could be, you know, it's still I mean, what are the numbers you think per member state per year? It could range between, let's say,
We've
3
got
million.
27 member states. It's in the most conservative scenario, 140 megatons per year. So roughly 5.8 megatons per member state. Obviously, the member states have very different sizes, but it's quite sizable. I mean, you think of a country like Germany, we're talking easy double digits megatons of international credits every year. So it's a big volume. That's why the 3%, they snuck it in with 3%, and people are like, it's nothing. It's a lot.
Okay, so you think that this 3% cap on international offsets from 2036, that's a realistic and sufficient cap. It doesn't need to be like, do you think it needs to be higher, or do you think,
Oh, that's a
will
tough
it?
sell.
That's a tough sell. I mean, because the argument on the other side is, this is going to constrain, Europe's industrial competitiveness, right? Like, um, there's a lot of disagreements around Europe's industrial competitiveness
Mhm.
due to some of the climate policies that are in place. I mean, you have done a lot of work in Germany, right? And I know, Germany basically had blown up the energy market years ago, right? And I think there's just a lot of uh, disagreements there. So I'd love to get your take
Mhm.
on both sides, right? Like, as someone that has worked with the policy makers there. I mean,
Yeah.
do you think this delay creates some uncertainty? Like, how does this affect, does this affect CDR developers and investors today if there's not a clear kind of demand picture, right? Or do you
Mhm.
think it's already set in stone?
So we were supposed to have this target set in stone a while ago. Like this has been delayed several times. And the problem is that the past Parliament, European Parliament and European Commission, they were fully adamant on this. Then we had an election, and the right, and especially the far right, won a lot of seats last year in the European
Mm,
election. And that, alongside the Trump election, has shifted sentiments quite a lot. And as you said, we have a struggling industrial base in Europe that's really struggling. And so we've seen a bunch of climate policy being under attack. For example, the Green Claims Directive, which we didn't touch on
mm,
yet, has been cancelled in a couple of months ago at the final stages. It was basically almost across the finish line, and it got cancelled for the same reason, competitiveness. Now, the Commission, they still want to get the 90% through, but they're doing it by introducing so-called flexibilities. The international credits is one flexibility. The use of domestic CDR instead of reductions is another flexibility, by the way. So there's a bunch of these flexibilities. It's brought forward really to weaken the ambition. And this is where it gets tricky, right? For example, with credits, what credits are we talking about? And depending on what credit, for me, the amount is what everyone talks about. And it's significant, and we can debate that. But for me, it's less the amount, it's more the quality. I
yeah.
don't care if it's 140 megatons or 400 megaton. I care about it being high quality and actually quality enough to replace a European emission reduction.
Hmm.
Now, if done well, and that's my position, done well, these international credits could lower the cost to achieve the 2040 target for Europe, right? That's the positive, the pro side of doing international credits. At the same time, it will take money away from domestic industry in the climate space that you could foster, right? So it reduces compliance costs, but it also reduces the fiscal injection into a domestic carbon removal industry, for example.
Yeah.
So there's
Yeah.
both sides,
Yeah, there's
but
double-edged sword.
overall, I think it's the right call to use international credits because I spoke about Exomat before. There are a lot of advantages in terms of cost and volume of using credits, especially from the global south.
Yeah, and I think touching on credits from the global south, right? And you you mentioned how this is a double-edged sword, and I think it also tends to be a double-edged sword with nature-based solutions as well, right? Because here you have, stakeholders in the global south saying, okay, we hold most of the natural carbon sinks in the world that sequester most of the carbon in the atmosphere, for example, the Brazilian Amazon rainforest. And then here you have, leaders in Europe telling us to decarbonize and do all this, but then they don't want to, invest their capital and put their capital into our country to preserve these natural sinks that benefit everyone, right? So I think that's the argument, or there's an argument going on about nature-based removals and then durable removals. Obviously, I think I've heard some folks in Latin America say, oh, 3%, that's too little because, that's not enough demand for our credits in the future for our nature-based projects. How are we going to stop deforestation? How are we going to, preserve the land, right? If that's what they want us to do, we can't do it by ourselves. We need global north capital, right? So I think I would love to get your take on that and the kind of situation that's playing out internationally.
So the first thing I'll tell those people, again, it's not 3%, it's 30 plus, right? That's the first thing. And the second one is the role of temporary versus durable removals within this target. And my position here is that is the kind of like for like principle, right? Like basically short-term emissions, think agriculture in particular, require or can be offset with temporary removals. Long-term emissions, think industrial, fossil industrial emissions need to be offset with durable removals. And if you think about agriculture in Europe, it's a huge issue, right? Like our LULUCF is struggling. We're going to under-deliver. We're going to fail our LULUCF targets in 2030. Agricultural emissions are on the up. And we need solutions that nature-based carbon removal can provide. So I think there's going to be a lot of potential for these providers to benefit from this policy.
Yeah, certainly. And what do you mean by like these short-term emissions and then the long-term emissions? I kind of want to just double tap on that really.
The like-for-like principle, which is something that is being embedded in a lot of places in European climate policy, it kind of means two things that kind of overlap. It's basically if you think about carbon cycles, if you take something from out of the short-term carbon cycle, you can put it back into the short-term carbon cycle. Example, agriculture, methane, and then on the other hand, nature-based carbon removal. If you take something from the long-term carbon cycle, so you pump fossil petrol from the ground and you burn it, you need to put it back into the long-term carbon cycle, so underground, for example, or permanently remove it. So this is the basic idea, is essentially matching short-term with short-term and matching long-term with long-term. Because if you matched a fossil emission with an afforestation removal, essentially you would buy 30 years or 40 or 50 years, but then you would just push the debt to a future generation. And that's this kind of like-for-like principle that is being embedded in a lot of carbon removal policies in Europe right now.
Yeah, that's very interesting. I mean, given my initial thought is just the fact that, no matter where the carbon is emitted from, right? I mean, carbon is stored in the atmosphere for hundreds and hundreds of years. I mean, there's still carbon in the atmosphere from the World War II era, right? So I think, yeah, there are definitely going to be some complexities there, but I like the idea, and thank you for explaining that. And yeah, so I want to move on to progress at the individual country level, and of particular interest for CDR are the latest developments in the UK and in Germany. And we touched on Germany a little bit and the UK a little bit, but I want to do a deeper dive. So, and and this is actually something I got from your podcast, the CDR Policy Scoop. The UK rolled out one of the world's most detailed government support schemes for carbon removals, and they published a 500-page guidance on the new greenhouse gas removal business models. And the punchline is UK plans to use 15-year contracts for differences, CFDs, to support CDR projects, starting with engineered solutions like BECCS and DAC. So that's a huge deal. So I think it would be great if you could unpack that for us and talk about the impact that it has. Why are they doing that, and what will it achieve, right? Like, I think that's a big deal.
So the UK has been a front runner when it comes to carbon removal policy for quite a while. And actually, the person that came on our podcast, Laura Hurley, she was leading the team in 2020 that started this work. She's left government now, but like they've been going at it for 5 years. It started with the Conservative government, and now the Labour government is doubling down. So there's a long history of it. They've also committed to invest 22 billion pounds, significant money, into CCUS, including CDR, over the next 25 years. So there's money on the table, right? And now they have essentially two really important, I would say, tracks for carbon removal. One are these greenhouse gas removal, basically CDR, their name for it, business models. And these were created as an incentive to scale the voluntary carbon market originally. So the idea was essentially we're going to create a scheme that will allow suppliers to plan for 15 years ahead with a specific price. We're going to encourage them to sell their credits on the voluntary carbon market. And actually, if they manage to sell it at higher prices, we're going to reward that. And thereby, we're going to unleash, again, this co-financing idea. We're going to unleash private capital into our domestic carbon removal sector from the VCM. So really smart stuff, starting with BECCS and DACCS. So far, it's limited to BECCS and DACCS, and it's limited to one of their 4 CCUS clusters. So it's currently 2 projects in the west of the UK. But it's significant. With this business model, they're planning around 4.5 megatons per year, right? So it's a lot of money.
I mean, essentially, the government will pay, the difference between an agreed strike price, right, the price needed for the project to be viable, and the actual market price of carbon credits or allowances over 15 years, right? So that that long-term stability can make projects bankable, right?
Exactly. It's huge. 15 years is a long time, especially in a market that hasn't existed for that long, right? And then in parallel, maybe I mentioned this too because it's really important as well. The UK has the second biggest emission trading system in the world. It's a tenth of the European one because the European is really big, but it's still the second biggest in the world. And they've announced essentially how they plan to integrate carbon removals into the ETS ahead of the EU as early as 2029. And again, starting with DACCS and BECCS, where they already have development, the BSI, the British Standards Institute, is developing standards for. So again, you've got these 2 tracks with the business models and the ETS integration, plus the funding that's already set aside that really put it in a front runner seat.
Yeah, and from my understanding, a few months ago there was a verbal confirmation that the EU and the UK will have their ETSs linked in the coming, by 2027.
Exactly.
So that creates an even more, bullish case for CDR, right? Because do you think that that policy could trickle over into the EU? And this maybe would be a good segue into Germany, right? To talk about what's happening there. And do you want to touch on that, or do you want me to?
Yeah, maybe first I'll quickly touch on the EU question.
Yeah.
The EU has by far the biggest ETS in the world. We've got 35 ETSs around the world, and the EU is like 86% of all of them. It's big. And it already covers 40% of European emissions. And there's a clear intention and political support to integrate carbon removals. There was a consultation early in the year, but I think it's almost a certainty that it will happen. The earliest will be 2031. Again, probably starting with DACCS and BECCS. Biochar is a big debate right now. And the idea here is that you could stabilize the kind of allowance prices over time by feeding in carbon removals and make sure that it doesn't get out of control in terms of price. How that links to the UK is super interesting because the UK is moving first, but the UK is only a tenth of the EU. So you would expect that it would follow what the EU is doing. So it's an interesting kind of interplay, but broadly they're going in the same direction. So that's not hugely contradictory, right? But yeah, that's where we're at in Europe with that.
Yeah. It's great to hear the support for CDR amongst these communities, right? Because I think it's amazing how just a few short years ago, and there's still folks to this day that are really against the use of offsets.
Absolutely.
Like a lot of environmental activists, NGOs are highly against it, right? So what do you think has maybe switched that narrative or pulled a lot of people in to being bullish on and being in support for the carbon removals versus a lot of these NGOs and so-called environmental I like to say so-called because I think it's kind of a little bit of hypocrisy to basically say no, we don't want this capital to be flowing into solutions that can solve climate change or play a big role to mitigate the negative effects of emissions, but then also be for solving climate change. I think it doesn't make any sense, but would love to get your views on that narrative change and the opposition, the opposing party.
One word, science. I mean, the
Yeah.
IPCC, every single 1.5 and 2 degree scenario requires CDR.
Hmm.
That's the mic drop. Now you can decide to question the IPCC itself, which had happened in several calls. Okay, then we don't have a basis for conversation.
Yeah.
By the way, I grew up in an environmentalist activist household. So I've had an identity crisis when I saw that my fellow kind of friends and colleagues started to go against me once I started working on carbon removal. But it is, some are stuck dogmatically in the emission reductions only space. But that's
Yeah.
not aligned with science. And thankfully, you're seeing more and more politicians who are realizing that because frankly, they're going to miss their targets if they don't.
Yeah, 100%. I mean, I saw online a few, months back about, I think it was Greenpeace or another group that basically said if any airline is using offsets, like, don't use their airline. Like, that's ridiculous. Like, they're just basically, kicking the can down the road. And I thought to myself, how do they expect these global airlines in the global aviation industry, which is made off of burning jet fuel, to just decarbonize overnight? Like, that's just impossible, and it's not going to happen for years and decades to come, right? The energy system still relies on 80% fossil fuels globally. So this idea that we're gonna just, you know, we need to decarbonize in 5 years, like it's just not going to happen without the use of these carbon removal technologies, which need to be scaled from the carbon market and from compliance mechanisms. So
Mhm.
I think that's a really hot topic, but also it's shifting. The narrative is shifting away because we've seen that before with nuclear energy as well. A lot of back in the 70s and 80s, and in the 60s, they said no nuclear. We want oil and coal. Like, no nuclear. Nuclear is bad. The radiation is
And
bad. And
look where
then
it's ended up in Germany. We've got the
it,
dirtiest, most expensive energy in Europe.
exactly, and then
But yeah, let's not
neighbor
open the whole
France.
nuclear Pandora's box because that we won't cover anything else anymore.
Yeah, but I think it actually, it's like a deja vu, because like you're seeing this kind of the similar thing happen with carbon removal. It's like the environmental groups that used to say, there's always just groups that get it wrong, right? And we saw that happen with nuclear, right? And you could just see what happened in the past, and you can just look at the landscape today. Germany, France,
Yeah,
and the
I'm familiar.
yeah, so we can do another podcast on that, but
But do you want to talk about Germany? Because I think that's an
yes,
interesting one to look
100%,
at.
100%. And I would love to hear your insights here, because you do a lot of work with, German, the German government, right? The German policymakers. So I want to touch on the fact that the German federal cabinet approved a budget plan to allocate nearly 500 million euros to CDR by 2033. So that is a huge commitment. I want to ask you to maybe unpack that and ask, where will that capital be flowing to? 500
Mhm.
million euros is a lot. Where does that get placed, right? And why now? Politically, why now?
So for me, and maybe for context, I'm German. I work for the German government. I want to see Germany succeed. I believe it has to succeed if we are to succeed in this fight, because I've seen what happens firsthand. Where Germany goes, Europe goes. And you need Germany to lead on carbon removal. And it has everything it takes to lead on carbon removal. Thriving startup ecosystem, academic excellence, big
Mm,
industry, a history of progressive climate policy. It has everything.
mm,
So a couple of years ago, I decided to found the first national CDR association globally in Germany, the DVNE. And I've been chairing it since. And it's been amazing to see, because 3 years ago in Berlin, nobody spoke about carbon removal. There was no support. There was like one research body on carbon removal. That's it. There was nothing. And fast forward, not even 3 years, and there's 500 million on the table and a CDR department, which to my knowledge is the first government CDR department in the world.
mm.
Dedicated CDR, not CCS and CDR. So it's amazing. So what's happened? A lot of hard work, a lot of education. of policymakers, a lot of great work by startups. We've got 50, 60 plus amazing CDR companies across the spectrum, really crushing it in Germany. And then we had an election, and we were essentially able to raise awareness for carbon removal within the election. And carbon removal provided an answer to quite a few problems to the incoming government, because they realized they're going to miss a lot of their targets. They realized that they needed additional solutions that were not just emission reductions, and they embraced carbon removal. That's what happened. And so it's really amazing. Now, these 500 million, again, they need to be signed off in the budget process in November, but the cabinet, that's the intention essentially. Of these 500 million, 150 million would flow next year. And the majority of that is CapEx support. And then there's going to be a chunk for public procurement directly by the government. Why? Because frankly, those are the two most high impact activities that a government can do at this point in time. Public procurement boosts confidence, draws in private capital into carbon removal, and CapEx, we need to finance these projects, right? Otherwise they don't take off. They can't get loans in many cases. We need government support. So super excited where this is going. And this is just the start, right? Like now there's a budget line in the European budget for carbon removals. And in the future, hopefully they will just double down with bigger sums.
Yeah, 100%. I mean, it's very significant moment. So I also want to highlight that they're also putting 44 million towards soil carbon measures in 2026. So they're showing support for both tech-based and nature-based. And on top of that, an additional 320 million, if I believe, is planned from 2027 to 2033 to sustain that effort, right? So a serious amount of capital going to this. I wonder, I mean, do you anticipate a wave of new projects and new startup companies formed focusing on Germany because of this?
So I would say that we have a thriving startup ecosystem despite government support so far, to be perfectly honest. They face so many roadblocks, and still we've got 50 to 60 incredible companies already. Now we're seeing, I mean, as the chair of the DVNE, I'm seeing this every day. We're seeing international companies, non-German companies, reaching out to us, being like, hey, we want a slice of that pie. Can we set up shop in Germany? So we're seeing a lot of international companies moving into Germany. So yeah, I expect that the ecosystem will only thrive even more in the next couple of years.
Yeah, amazing. Well, I think, want to be cautious of your time. So I want to close out on a forward-looking note, right? So my last question would be, looking out, 2 to 3 years, what do you think will surprise people most about the evolution of CDR and the CDR market? Now, you can take a second to think, because
I think what will surprise people the most is how something that is so niche and nobody really knows today is going to become a mainstream industry, right? Like today, carbon removal is something, if you mention it at a dinner table, people will think of forests, maybe they're going to think of Climeworks, and that's it. I think that's going to change. I think in a couple of years, if you mention carbon removal, it's going to be like mentioning solar. And people are going to be like, oh yeah, of course, yeah, great. We need to do that. It's a huge industry. Let's scale it further. So that's what I'm excited about, is essentially the signs I'm seeing, and I'm already seeing a couple of signs of how CDR is going to go mainstream. Again, coming back to the beginning of the conversation, we need fungible, liquid market for carbon removal. Otherwise, this is not going to happen. But once that happens, which is in the next couple of years, I think it can really take off.
Yeah. And then once it takes off, the atmosphere is the limit. No pun intended. This is the limit.
Good one.
All right. Well, thanks, Sebastian. Thank you so much for joining us on this episode of This Week in Carbon. Really appreciate your time and your insights. This has been a fantastic deep dive. So, thanks again. It's been a pleasure. And thank you to our audience for tuning in. And be sure to check out the CDR Policy Scoop, Sebastian's podcast, and we'll catch you next week.
Thank you so much, Ed. This was really, really fun. See you soon.
Yeah, thank you. See you. Have a good one.
Bye, Ed.
Bye.
Hopping off, okay? Bye-bye.
Yeah, sounds good. Ciao.